If you've checked your 401k lately, you might have noticed the markets had quite a run, but some big name investors are starting to sound the alarm, warning that stocks, especially AI related ones, could be headed for a serious correction. So is it time to panic, or is this all just some noise? Financial professional Nathan Fort from Vital Wealth and Retirement is here to answer your questions. Okay, Nathan, what is going on here? Talk to me about these AI stocks and why some investors are starting to get nervous.
Well, for one, I forgot my crystal ball. So if anyone's hoping for like a financial forecast and what stocks are going to do, we just don't have that. There's a lot of talk about it because AI stocks have done really, really well. It's kind of AI is kind of transforming the way a lot of people do business. And so right now, we're not totally sure exactly what long-term changes are going to take place in the markets. So the important thing to do if you're an investor and you don't know which stocks are going to do well, which ones are not, which nobody does, you should be diversified, right? You should be spread out. It's kind of like standing on a frozen pond. You don't want all of your weight on 1 square foot, right? You want to spread it out. And the market rewards you for being invested in the market. There's a really interesting study done by JPMorgan Chase that showed if you invested $100,000 20 years ago, today you'd have around $850,000. But if you happen to miss the best 10 days of the market, not 10 weeks, not 10 quarters, if you miss the best 10 days of the last 20 years, your $850,000 would be knocked down to less than $400,000. And half of those 10 best days took place in a bear market when markets are down. So you just don't know.
How do you know? I was going to say, how do you know when those 10 best days are? Do you just get lucky, or
if you knew, this would be so easy, but you don't. So the best way really the driver of your behavior with how you allocate your money and how you invest really should be the purpose you give your money, meaning how long do I have before I'm going to need this money? I'm going to need to withdraw it. The longer you have, the more tolerance you should have of uncertainty and market volatility. We call it risk. But if you're going to need money in the next 2 years, well, you should be very defensive, very protective of that money you're going to need. Because the markets are up 7 to 8 years out of every 10-year period. So there's the 2 to 3 years where the markets are down or they're sideways. So if you have a defensive strategy to protect the next 2 years worth of withdrawals that you might need from your investments, then you should feel very comfortable being fully invested with the rest of your money. Yeah. The key is you need to have a plan.
Okay,
you need to have a financial plan.
And that's usually the case. So when it comes to AI and your 401k, the big thing is just diversify.
Yeah, be diversified.
Don't lean too much into AI. Even though it seems like, it's popping and all these companies are popping up and the world is kind of leaning into it, don't do it when it comes to
And here's the thing, you can benefit from AI by just being invested in large companies that are embracing this technology. So you don't even have to own the AI stock. You just own companies that are using the technology, and you could benefit from that as well.
That's almost like almost every company at this point. Everybody's
hopefully some people are not going to adopt. They're going to fall by the wayside, but that's why you want to be diversified, right? Be spread out.
Very important, helpful information. Thank you so much.
Cool, thank you. Good